Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Thursday, June 9th. It's all about the economy today on Wall Street, as stocks look to break a six-session losing streak. Investors are digesting the latest data on international trade, as well as the weekly jobless claims report. We'll bring you all those numbers and the market reaction after the opening bell. Meanwhile, the president of the Federal Reserve Bank of Philadelphia is backing up Ben Bernanke's statements from earlier this week. Charles Plosser said the recent slow pace of economic growth is only a temporary soft patch, and he expects GDP to rebound to 3 to 3.5% over the rest of the year. Plosser also accused politicians of playing a game of chicken over the debt ceiling, and he said that there would have to be a pretty extraordinary deterioration in the economy for him to support a third round of quantitative easing. Bernanke disappointed investors earlier this week when he failed to even mention the possibility of QE3.
The European economy is also grabbing some headlines this morning. Both the Bank of England and the European Central Bank decided to leave interest rates unchanged as expected. Right now, investors are listening to ECB President Jean-Claude Trichet's press conference. Most analysts expect the central bank to hike interest rates in July. Following the decisions, the euro is picking up some ground against the dollar. That's lending even more support to oil prices, which jumped nearly 2% yesterday after OPEC failed to raise its official production quotas. Some analysts say that Saudi Arabia, the world's largest oil producer, is trying to keep prices high to fund new social programs that it promised its citizens, in hopes of avoiding the unrest that has swept other Arab countries. But OPEC's decision to keep output steady is boosting more fears that higher prices will undermine the pace of the global economic recovery.
On the corporate front, semiconductor stocks may garner some attention. After yesterday's closing bell, Texas Instruments cut its earnings and revenue outlook for the current quarter. The chipmaker blamed the downgrade on lower demand from a single wireless customer. That customer is believed to be Nokia, which cut its own second quarter outlook about a week ago because of weak sales. TI's rival, National Semiconductor, will report its quarterly numbers after today's closing bell. We're also keeping an eye on shares of J.M. Smucker today. The packaged food maker reported a decline in its fiscal fourth quarter profit, partly due to higher commodity prices. But higher sales volumes and product prices helped Smucker boost its revenue by 11%.
Financial stocks may be back in focus today. Visa is modestly higher ahead of the open after it announced a deal to acquire South Africa's Fundamo for $110 million in cash. Fundamo provides mobile financial services in developing countries. Visa said the acquisition will be slightly dilutive to earnings this year. Separately, Citigroup is dealing with a security breach. Online hackers gained access to the Citi Account Online site, potentially getting the names, account numbers, and email addresses of hundreds of thousands of bank card customers. The Financial Times reported that Citigroup discovered the breach in early May and has tightened security and stepped up its fraud detection since then. The attack reportedly affected about 1% of cardholders, but it's unclear whether any customers had reported issues with their accounts. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction.